Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hey everybody, Happy New Year. Looking at the dollar and gold, and after 4 bullish days for these bull miners, we are finally seeing some normal healthy consolidation to wrap up 2016. So we had a gap down open on the dollar, and we filled that gap literally to the penny before the bears took back over. And you can see the low was 102.60, and we hit a high of 102.59. And you might say, well, there's a penny of room in between there, but the definition of a gap is not having any trading range between, and you can't trade between 102.59 and 102.60. So as far as I'm concerned, there is no gap there. So we have new support established down here, the low of 101.91, and we can see zooming out now, we don't have a ton of support. We pointed out 102 psychological after breaking 102.52. And the support down here of 101.99, that's where we're bouncing off of. And we definitely need to put a support line at that level, because if we break 101.99 more convincingly, the next support I'm looking at is 101.78 down here, previous resistance, now support. So we're starting to take out some support levels. And even though the dollar was still weak on Friday, we saw gold consolidate as well. So gold still has the higher low pattern on the hourly. Key support here is 1144.29. And bulls really want to hold that level to see this strong uptrend maintained. We did break the low of this little period of consolidation that ended up being that bull flag leading to further upside. But after such a big breakout, losing that little support is not a big deal in the long term. If we look at the 4-hour chart, a little bit different view. Certainly a lot of consolidation going on, but also certainly still maintaining an uptrend. So on the daily time frame, we're watching that 10-day moving average support, bearish reversal candlestick after 4 big bull days, and as long as we hold moving average support, the bulls are looking good in the long term, or I should say the short term. The long term, very clearly still a downtrend. The bulls now need to start forming higher lows and higher highs in order to reverse this longer term downtrend on the daily time frame. If the bulls can get up to 1200, then we'll start looking at reversing this longer term trend that certainly favors the bears. But as of right now, we hit our first target of 1160 resistance and we rejected from it, and now we're looking up, if the bulls can get over that level, to 1180. So once this bounce started out, those were our targets, 1160 and 1180, and we're looking to see if the bulls are able to form a higher low of support and then get back towards those levels. So I need to put in the 10-day moving average here. So there's the 10-day moving average of support. That's down at 1138.23, and the bulls really want to hold that level on the first test of support. After it was resistance for so long, the bulls will gain a lot of confidence if they defend that 10-day moving average and head back up towards the recent high of 1163.05. So looking at where these miners stand now on the daily time frame, very, very weak close, and notably more weak than we saw on gold. And that's because we had gold consolidating and the market, the S&P 500, pulling back at the same time. So after a big 4-day bull move, Very clear bearish reversal candlestick on some very big volume and a close down near the low of the day. So this does indicate that it is likely to see some further consolidation. And like I said, the bulls need to form a higher low and then keep continuing up and break the high that we've seen here, which for JNUG is 720. Weekly time frame, look at that exponential resistance, yet another rejection. 1, 2, 3, you could count over a half dozen times here. Exponential resistance rejecting the price. So a big upper wick of profit taking. We need these exponential weekly moving averages to become support in order to change this very clear downtrend on the weekly time frame. So looking at NUGT, similar candlestick, closes near the lows, high bear volume. What's notable difference here is the bull volume on Thursday for NUGT was higher than the bear volume on Friday. Not the case on JNUG, not even really close. 60, we'll call it 70 million compared to 76. So almost 10% more bear volume, and NUGT not the case. Still on the weekly, we are rejecting from exponential resistance, and very clearly those levels need to become support in order for this bounce to continue. So looking at the bear miners, they've got a nice big solid bullish reversal candlestick. JDST is the one to be playing in my opinion if you're playing the bear miners, because JNUG is weaker than NUGT. So a big bullish reversal candlestick on high bull volume. We'll be looking for some upside to confirm it. Looks like there's a little gap here, 41.82. That's our first target on this bounce. And we can't disregard the fact that JDST and Dust here have had a nice little uptrend over the past 5 months. And we are still holding the weekly middle Bollinger Band support. So those levels are important to be watching going forward. And it's all about the ability for gold to hold the 10-day moving average, in my opinion. That's what I'm going to be watching, because that was the trigger to go bullish on these miners. Once gold turned that level into support, we saw 2 days of further upside, and now we need to hold that level on a back test. Potential bullish entry back into those bull miners if we see a successful support hold of that 10-day. So I appreciate you watching. I hope you have a happy New Year's, and we'll see you to start 2017 off on the right foot.